Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. So we are at the start of 2021, and of course one of the big themes of 2020 was how well tech stocks did. QQQ here, which is the NASDAQ 100 ETF, and of course heavily traded, over 150 billion market cap. You could see what it did over the last year. A low 52-week low of about 165. That was during the COVID crash, but closed the year at about 312, which is just under the 52-week high or all-time high of nearly 315. So obviously a big year for tech stocks, driven by some of the big names like Apple and Amazon and Facebook. And of course, those companies did well during the year, as they were not as heavily impacted by the pandemic as some other stocks. So there was a lot of money flowing into those. And it's interesting to see, looking at some of the trades at the end of the year, like what people may be doing to position for the next year. And one thing that caught my eye here was this June call here. This was a June 18th, so about a 6-month trade. Looking at this trade here, the 350 calls looks like they were sold for just under $6, and this is stock contingent, means it's tied to stock. So very likely this is a covered call trade. So someone bought, 450,000 shares of QQQ, sold the 350 calls against it for about $6. They collected about $2.7 million in premium. This trade was done with the stock at 313. So, what's likely going on here is, again, this is a covered call trade. If you look at the dividend yield for QQQ, it's not really known for its dividend, right? It's 0.5%, just a little over, 0.6% for the year. So you look at something like this, and this is a way to potentially increase your yield on it, because a $6 premium is something like 2%. So that's for 6 months. So if you look at that for a year, it's about 4%. Not huge, but 4% in this day and age is not bad for holding an index, and particularly since there's really no dividend to speak of in QQQ. But also the fact that it's done at 350 means that there's plenty of room for it to run higher during the year. 350 is the cap as far as it can go up, but that's still quite a bit higher than 313. And given how much it rose this previous year, it's not likely to have another year like that, right? It's likely to be more sideways this year, but this covered call does give it room to run for the first 6 months up to 350, while adding about a 2% yield. So interesting trade, moderately bullish on QQQ. And if you want to look at how something like that is set up, again, you can see, how far QQQ came from the bottom up here to the all-time high. And so if you look at 350s all the way, above this chart, right? So there's still a lot of room to run for over the next 6 months if you're selling that 350 call. In the meantime, again, let's look at that. We go here to June, and we'll find that 350 call here. And you can see here, this is 4,500 of this was that trade, and you can see, the juicy premiums here that can be sold. So, if you wanted to do something like this, covered stock, covered call, buy right, different names for the same thing, but it's for every 100 shares you sell one call, and that's how you are able to get long this stock while also collecting some premium from the short call. So if you're interested in that sort of trade, the covered call trade, you can click on the report below this. It's free. It gives you an idea how to get into covered calls, and it's a good way to get started.